All right, so Brad,
All
thank
right.
you again for hopping on. I know your time is valuable, so we really, really appreciate it.
Sure.
And what I wanted to ask you first off, how long have you been in the industry?
Well, so I got my license in um, November of 2016, and I spent 6 months as a captive agent with the #1 insurance company in the world. They're out of France, without naming names. Wore a coat and tie, sat in a pretty office, 6 months, no sales. So I left there and I went to the #1 mutual insurance company in the country. Across the street, really pretty building. New coat, new tie, 6 months, no sales. And then I came to Family First. So clearly I was not very good at this. Came to Family First Life, started buying every lead I could get my hands on. Did 19K in my first 30 days. And I was not very good. I just worked hard. So in 2018, I was with FFL for 6 months, did 80K, was really inconsistent. 2019, I really started going full time in February of 19, and I was number 166 in the country. Back then, you could see where you stood.
Yeah.
I just wanted to be in the top 100. I didn't want to finish the year outside the top 100. And I ended up finishing number 7 at 515K in almost my first full year in the field. And then 2020, in January, I said, you know what, I'm such a knucklehead and I'm calling timeout all the time. I bet you I could do $1 million. And people are like, whatever. And so I said, no, really, I'm going to do $1 million and I'm going to do 600K in annuities. And I'd done just a little bit in annuities. I think I'd written 6 in 2019, but I said, I'm going to do 6 million in annuities in 2020. I'm going to do 400K. I'm going to get my second red jacket in 2020. And I ended up getting 500 IP. So 5 million in annuities, finished #1 in annuities for the country for FFL, and wrote like 70. So yeah, much more than 6. And I got about 600 and change on the life side.
Wow.
So yeah, hit my goal, #2 in the country for 2020 behind Steve G in Florida. So.
That's truly amazing, Brad. Now, the first thing that popped out to my head that you said is that you got to FFL and you bought every lead you could buy. And
yeah.
Was that because you at the other companies you didn't have leads and you actually could buy leads here, or what made you in your mind say I need to buy every lead?
Sure. Yeah. So I was 2 from the top of Washington Mutual Bank when it went under. So I was accustomed to moving up in organizations. And so I was sitting as a captive agent in 2 very large, successful organizations, and I was just struggling mightily. I mean, could you imagine going a year without a sale?
Yeah.
So if I go a day without a sale, I'm freaking out.
Yeah,
so,
me too.
A year without a sale. So, I mean, I just don't quit. But they had no leads. So it was like, go to the Chamber of Commerce, the Rotary Club, all this multi-marketing, shake down your friends and family. It's like, no way. When I go to the barbecue, I want to be Brad. I don't want to be Brad, the sales guy. So when I found out that there was such a thing as leads, I mean, I had a budget. I had about 20K. I said, I'm in for 20K. And they're only like, $30 a pop. Some of them were like 60 if I could get my hands on them.
Right.
And so I think I started off at like 500 a week. And then within the first couple of weeks, I went up to 1,000. And then I went up to 1,500. And I kind of hovered at 1,500 until the end of my first 6 months. And then I figured, leads are money. I'm like, worst case, I'm getting a 4X return. Right. So it's just how many can I process? So I bought Back then they didn't have instant internet. I bought a lot of EverQuote. I got 5 EverQuotes 7 days a week and turned them on and never turned them off. I got turning 65 leads for Medicare, which is where half my annuities came from, by the way. And then anytime I could lock out a county for mortgage protection, I did. And I got myself up to around 2K a week. And that was kind of where I stayed for most of my production, was 2K a week.
Love that. So you gradually moved up. It's not like,
Yeah.
I know you said you had 20,000 coming in, but obviously we all know that most people are trying to change their scenario coming from a rough position. And so it's about building up to that.
Right.
And I know that 2,000, I keep sharing that number across the board with top producers. 2,000 a week, 2,000 a week, 2,000 a week. I mean, it's no secret at what it takes to become a top producer. Now, we all aren't going to come into this with $2,000, but it's working your way up. Just like Brad said, you gradually work your way up to that.
Yeah,
I know myself pretty well. So if I buy an axe, then I'm going to buy some wood. You know, it's like, well, I got this axe. I don't have any wood. I got to go buy some wood.
absolutely.
I just psych myself out, right? So I play games in my head. It's like, well, I just bought 2,000 in leads. Now I better go work them, you know, because it's not hard to swipe a credit card, but now you got to actually dial them and run them. So
Absolutely. So what I wanted to kind of go over was, like I mentioned from your training at conference, I love how you broke down the budget. And one of the things I really took away from your training was saying things like, for me to be able to give a suitable recommendation, I need to understand your budget, and then how you like sectioned it off. So I'd love for you to kind of go into detail on that, because I started using that in every home.
So if you could start, you set the table, Brad, and then lead
into that budget part. Yeah.
Yeah. So when I walk in a house, I have my license and my lead, and I rarely ever show my license. It just doesn't come up, but I always have it with me.
Right.
But I think when you walk up, so you get out of your car, I park in the driveway, right? I mean, it's their house, it's my appointment. So I park in the driveway, I walk in with swagger, and it's like, you know, anybody sick here? No, great. You want me to mask up? No. Or yes. If they answer the door in the mask, I keep my mask on.
Right.
But if they don't, you know, don't make it weird. Meet people where they are, you know, dress appropriately, act appropriately, be a bit of a chameleon. But I build rapport as I walk in, like 10 seconds. Nice dog, green grass, white walls, perfect. And then I go to a flat surface, right? And I turn the lead over and I draw 2 lines. And I separate the lead on the back, the blank page, into 3 equal parts. And I say, so my process is really simple, Bob. We're first going to talk about budget. Everybody's got one. And I draw a dollar sign. And then I said, then we're going to talk about whatever insurance you may have. So I don't want to recommend something that you don't need, because, you know, I would lose my license and I don't want that to happen. So we're going to talk about that. And then lastly, we're going to talk about health, because these are health-based plans. So budget is interesting, but if you don't qualify, it's just a nice budget. So I kind of take some of the objections off the table just with these little word tracks, letting them know what's coming. And so I don't have a printed financial inventory. I've made one to hand out to my agents, but I just always forget to print it. So I just have it memorized in my head. And here's what it is. I say, hey, Bob, let's just say Bob and Mary. So, hey, Bob and Mary, and they're both there. What is household income approximately each month? Okay. And so they're like, I don't know. Can we do gross? It's like, yeah, I can do math in my head. Well, I make about 60. It's like, you make 60? Yeah, I think I make 60. All right. So, well, I make 65. Okay. So 125 all in, but about 50-50 split. Yeah. So now I know why I'm here, because if either one of you didn't come home tonight, we haven't finished the budget, but I can tell you I've been in over 10,000 houses. I'm assuming that neither one of you can pay all the bills if either one of you didn't come home, death or disability. Is that true? And I just pause and I let them think about that for a second. And they're kind of like, yeah, okay. I've only asked one question: what's monthly household income? And then I go to, okay, well, what's the mortgage or the rent, depending on what kind of an appointment it is. So I start off with like, 6K, so 5K and 5K. So I draw a line right down the middle of the page. And I've got Bob and I've got Mary, and their names at the top. And I put 5K, 5K. And then I do mortgage or rent, and they, say it's a mortgage and it's like 2,000. So I say 2,000. And I say utilities somewhere around $300-400 a month. And they're like, yeah. And then if they try to get a spreadsheet, oh, well, let me go get the water bill. It's like, no. This is Fisher Price math. They're squishy corners. Nobody gets hurt. We're just going to go ahead and ballpark like 350. Is that fair? Okay. Yeah. That's good. And sometimes if they really push back and say, no, our electrical bill is like $700 a month. Well, then I'll put that down, but it's usually like $300-400. And I say, do you have a car payment? And I say, yes. It's like, okay, $400. Car insurance? Yeah, about 100. Yep. Okay. And then do you have credit card debt, or do you pay them off each month? Well, we've been paying on it, but we do usually about $400 a month, but we've only got one more payment left. See, I'm looking for premium. So I ask those questions. It's like, how close are you to paying off the car? How close are you to paying off a credit card debt? And I'm looking for savers, right? So then it's okay. Food. How many people in the house, Bob and Mary? Nope, just the two of us. I say, okay, about 300 a month? No, 4. Okay, 4. And then I say cell phone. And then I say, do you give to friends, family, church, any monthly charitable givings? And they say, yeah, about $100. So then I do the math, and let's say I end up with like, $2,200 left over. And I circle it and I say, okay, does this look about right after you pay your reoccurring bills? And they say, yeah, because most of the time when I'm doing this, it's with people for the first time ever even doing a budget. They've never even done a budget. They don't even talk about money in their house because they don't manage their money. And I say, perfect. And then I circle that, and then I draw an arrow and I write the words checking and savings. And I underline it and I say, are you guys savers? How many months worth of bills, Bob and Mary, can we pull out of the bank if either one of you do not come home tonight? And then I pause again. And it's usually about 4 weeks, 4 to 6 weeks worth of cash on hand. And then I say, well, that's the next reason that I'm here. Now it makes sense to me. Now I know exactly why I'm here. And then I go to the next section, and this is exciting. Okay, the next section, well, it was already exciting, but this is more exciting. Yeah, so the next section is, what do you have that looks or acts like insurance that could cover the liability in your estate at the time of your death? Okay, that's the golden question. The silver question was, are you savers? Because we're looking for savers because they're planful and they have premium. They have a need and they have an ability. We still don't know their health, but we know their budget, okay? So in the middle section, which is the insurance piece, what do you have that looks or acts like insurance? 401k, money market, CDs, stocks, bonds. Do you have any annuities? Do you have any life insurance that you own? Not the rental from the company that you work for, because that's like a company car. God, I hope you don't like drive around in somebody else's Maserati. You're not like upgrading your rental insurance, are you? It's like, well, yeah, I actually am upgraded on mine. It's like, well, I can save you some money there because you don't own that. When you are retired, or when you retire, sometimes you don't get to choose. You have to give the keys to the company car back. That is not your coverage. I deal with people that are owners, not renters. Does that make sense? And they're like, oh, okay. So let's say they didn't have anything. So I just draw a line through that section. And then the bottom section, I say, what kind of medical conditions are we dealing with? Any heart attack, stroke, cancer? Have you ever been declined for insurance? Nope. It's like, do you take any medications? Nope. And I say, perfect. So you are both A+. I give you a gold star for health. Everybody likes getting a grade. It's like I give people homework assignments. I give people grades on financial inventories because everybody, by the way, nobody gets below a B. but they just
100%.
love getting an A for health. It's like, boy, Bob, you really took care of yourself. You're going to have to work on it. You got an A, Bob got an A plus. I create a little, tension, a little competition in the house when it comes to health. And it's like, yeah, I'm feeling good, Mary. I got the A plus, right?
I've been working out.
Yeah. And okay, so that's that scenario. And I say, well, now we know what your budget is, and we think we have a pretty good idea on health, but we won't really know until we apply. So why don't you go ahead and grab your ID and banking info, and I'll get set up here. And I just open up my laptop and I prepare to write an app. Very assumptive, very much overcoming the objections before they even come up. But that's how I run every appointment, whether it's final expense, mortgage protection, it really doesn't matter. They're pretty much always the same.
I love it.
So many good words, Brad. I love that, man. And we'll have this call recorded for everybody that's on here. But my thing is, so obviously being assumptive works with most people. But for the people who kind of are like, why are you asking me these questions about my budget?
Yeah.
Why do you need to know this? How
Sure.
do you overcome something like that when we're in a home? Like, I don't want to tell you that.
Absolutely. Yeah. So the people that push back the hardest are actually buyers, and they subconsciously know it. That's why they're putting up a fight, because they already know they've said yes. So I just kind of listen to it. And it's almost like Charlie Brown's teacher. Wah, 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 wah. I don't even really hear what they're saying, because I know that they've already become clients. I just kind of absorb the objection and I say, that's interesting, but I'm here to see what you qualify for. Okay. So we know that you have a budget, and I'm not here to stoke your budget. I'm here to solve a problem. We're basically managing risk. The insurance carrier is managing risk. That's what sets the price based on your health. And you're managing risk. It's either going to be income replacement or legacy or something, in between. But there's a reason that I'm sitting here. You filled out a request. And so we're assuming that you're going to be covered, and you can't assume. I'll tell you this, Bob and Mary. I've sat in a lot of houses, and no one ever becomes more insurable by thinking about it. There's really nothing to think about, because you haven't been given an offer. Okay. So let's not base, things on assumptions or fiction. Let's base them on fact. So luckily, as a licensed agent with non-medical policies, I can find out right here at the kitchen table if we can use your budget. Okay. So that's let me think about it. It's like, well, there's nothing to think about. They haven't given you an offer. It's not a toaster. I've said that so many times. It's not like you're walking down the aisle in Walmart and it's like, I don't know, honey, small, medium, or large. You have to be given an offer. Okay. So don't assume that they're going to take you. And like with the Americo, I mainly write the Americo CBO, because I mainly run mortgage protection at this point.
Right.
And it's like, it's just a no-brainer. Either you die in the term or you don't. Either you die day one and you're dead, but your estate only put down one premium and, big money comes in. Or even if you were to die the very last day, well, again, you're dead. But your estate's further ahead, live one more day and you didn't pay for it. So 100% death, 100% living, 100% extra accidental, 100% money back guarantee. There's no way you can escape value. But here's the thing, about, I don't know, half of the people that think that they can get in can't. So just don't get mad at me when we apply, because I've had people that had never been to the doctor get declined. And I don't know why, but I'm assuming it's because they've never been to the doctor. But I'm always talking and acting like, oh no, we're here to write a policy. I'm not here to chat with you or it's like, well, I've got to talk to my son. It's like, oh, okay, that's fine. Is your son a licensed insurance agent? It's like, no. It's like, well, with all due respect, my son likes to work on cars, but I wouldn't let him work on my car. He doesn't know how to work on my car. I mean, I know he would like to, but there's no way I would trust him with my transportation. It's kind of the same thing. I mean, I get it. If you've got family that is a licensed agent, you should use them. But if you don't, I mean, I'm local. I'm pretty good at what I do, and I do care about my clients. And I challenge you after we write this policy to call me. I'll answer your call. So I'm always being assumptive. I'm always kind of pushing forward. My manager, John Gavin, he, I don't know if I should say this. He said, you're like a psychotic grandma. I said, what does that mean? He said, well, you're like, hey, sweetie, would you like some of the muffins at the, farmer's market? It's like, oh, I don't know, grandma. It's like, no, you will take these muffins. Like, why can't I be a grandpa? I mean, I actually am a grandpa. He's like, hey, it's my story. You're a grandma. Anyway, I guess that's kind of how I am in the house. It's, once I'm sitting down, I'm closing them. I mean, that's what I'm there to do, is to protect a family, not talk about what ifs.
Yeah, that's a good point, because I used to build rapport a lot when I was new. I thought like building rapport is so huge. Like I wouldn't even talk about insurance until like 20 minutes into the appointment. And then now I got to a point where I'm like, I'm wasting so much time. Like just get to the point. Like you're there to submit application.
It's true. Yeah, you had a question pop up, which is a good one. I get this in the house all the time. Oh, I already have mortgage protection. It's like, well, that's great. So there's three kinds of coverage in your house. There's property and casualty, that's fires and floods. That protects your sofa. I don't do that. Then there's PMI, that's private mortgage insurance. That's the bank protecting the bank. They may make you get it because you have bad credit or not enough money down or both. And make no mistake, I mean, I was in banking and finance for over 30 years. Nobody wants to be in PMI any longer than they have to. And if you think that they're going to pay off your $400,000 mortgage for $19.95 a month, no. And by the way, ever since the 1920s, the insurance industry was born from the fact that banks used to make you get insurance to get a loan, and they just thought that that's too much power, so they split that power away from them. And that's why I'm actually sitting in your house right now. And there is an insurance industry, because banks can't do that. They don't do what I do. Now, if you have life insurance, that's fantastic. Let's just see if you have the new kind or the old kind. I say, what? What's the new kind or the old kind? Well, I'm a broker with 16 carriers and haven't met somebody I can't insure. And I guarantee you, if I can't leave you better than I found you, it'll be a really quick meeting. That's the kind of stuff that I say all the time, is that, I could go to jail, get sued, lose my license if I don't make a suitable recommendation. And I live here. I mean, we swim in the same pool. Why wouldn't I put you in a better spot? So, I mean, I take my job super seriously. I can guarantee you that I will not make a recommendation unless it markedly puts you in a better spot. And I say it with conviction and sincerity because I mean it.
Yeah. And it means that when you're breaking down the budget and things, you're building credibility, saying, I'm trying to find a suitable recommendation for you. That's
absolutely. Yeah. And I don't put people outside of 10 to 15% of discretionary income. And I tell them that up front. It's like, what do you make? What do you spend? What's left over? That's discretionary. So let's say you make 3, spend 2, you got 1. So your budget is somewhere between 100 and 150 bucks a month. So now we know with the math. What we don't know is whether or not they'll take you.
Yeah.
So, right?
Love
Someone
that.
asked about like multiple quotes. How do you do the quotes? Are you, when you break down the budget, you got how much they're saving, you got, kind of a 10% range, and then obviously they're in good health, let's say. How are you showing options?
I don't. Yeah, I don't. Yeah, I don't do the small, medium, large thing. I'm the expert. So I'm not going to hand control over an appointment to somebody that's not an expert. I know some people do the, bronze, silver, gold, and everyone chooses the silver. I've never done that. And so what I do, people basically don't want to be first. They'll be perfectly happy to tie for a 100 place tie for second. So what I tell them is like, well, everyone in your situation, and I do this all day, every day, I am the agency owner. So you're sitting with the right guy. Everyone in your situation does this. Now, not everyone gets in. I mean, so I tee up a sense of exclusivity. Man, of course you want to get in. Everybody just like you wants to get in.
Right.
urgency alongside exclusivity. Of course, everyone wants to get in. It's a cake and eat it too policy. If you don't need it, you didn't pay for it. It's cash back. So exclusivity, the urgency piece is you're not getting more insurable. I'm less concerned about you dying today, although I have had a guy die within 6 hours of me writing this policy. That was like about 8 months ago. And he did not know that when I wrote his policy.
Yeah.
But I mean, life happens. It's more likely that you become uninsurable. So you're as insurable as you're ever going to be right now. I mean, I'm pretty sure that most of us have some undiagnosed condition happening all day, every day. And once they become known, they can't become unknown. So let's lock in your health until it's documented, before it's documented. Because once you're in, here's the deal. Simple contract. You never miss a premium, and they continue to assume your risk. Now, if you miss your only obligation of don't you ever miss a payment, then they'll stop assuming your risk. It's like getting into that exclusive club, and it's like, right this way, Mr. Allen. And boom, they put the velvet rope behind me, and it's like, oh yeah, I'm in this great club. And then it's like, I can misbehave all I want because I'm in as long as I pay my dues. If I stop paying my dues, it's like, boom, out of the club with no guarantee of getting back in. So I paint those pictures and I tell stories, and I create a sense of
the sale.
Yeah, correct. And I paint a sense of exclusivity. Yes, of course you want in this, and urgency. If you don't do it now, the chances of you actually ever doing, how long have you thought about this and you've really never done it? The time's now. I mean, we know you have a budget. What we don't know is if we can use it. So we're going to find out here in a second. Grab your stuff and I'll get set up, and you open the laptop. And I mean, seriously, go grab your stuff, your ID and your form of payment, and I'll get set up here. And you don't even make eye contact. I just say it's so nonchalant, and I just start opening the laptop. I'm writing a policy
for you because you never ask anything.
What's that?
No, that was someone unmuted.
Oh, sorry.
Sorry about that.
That's all right.
But what I keep hearing is you're relating their scenario to a story.
Yeah.
And stories sell, or painting the picture sells. And every time we've asked you a question, Brad, you've told us a story.
Yeah.
And so there's no, I mean, I get it why you sell $1 million is because you're really freaking good at what you do. But my question to you is like, was there a mindset shift, or what gave you the conviction that every single person you're going to sit with, you're going to sell? Because I know there's a lot of new people on here who are going into homes hoping with their fingers crossed that they make a sell. Was there like a time, or was there something that you read or listened to that really gave you that conviction?
Well, if I can be honest, in 2019, I decided to go all in because I figured out Matt Smith. Everyone should know who Matt Smith is. Matt Smith on February 24th said, whatever your distraction is, figure it out. I know you could do this, but you're just not consistent. So figure it out. And I took that to heart, and I went to work, and I went from 166 in the country to number 7 and walked the stage with a red jacket. And then I was like, okay, game on. In December of 2019, my younger son killed himself. He committed suicide. And when I lost my boy, it just lit a fire under me that life is so unpredictable. You just don't know. So when somebody says, oh, I'll think about it, it's like, I mean, in my head, it's like, no, I'm not going to let you off like that. I mean, because again, it's not like I'm fearing that you're going to die the same day, but it's entirely likely that you're not going to get this done. And I know for certain that you do not get more insurable. And I've seen how devastated families can be without insurance, and how life-changing it is when they have it. So I just close it. I mean, I went on fire. When JB died, I said, I'm dedicating the whole year of 2020 to my son. Everyone I sit in front of, I'm closing them because I'm going to protect every single house I sit in. And I still feel that way. And I take him with me into the field every day.
I love
It
that.
shows,
Yeah,
it's
no,
just like, it shows that you care and you're wanting to protect the families that you're sitting with.
But the biggest takeaway is that Matt Smith challenged you, right?
Yeah.
Matt Smith said, figure it out. I don't know
Yeah.
what it is, but figure it out. And so to the 79 people on this call, I challenge you to figure it out and what's holding you back. Because we all got things that are holding us back. But when you unleash yourself, you can become $1 million producer. And you become
it's so easy. By the way, I mean, it is so easy to be $1 million producer. It really is. I mean, so I get the question, how do you do it all the time? I can tell you the straight up answer is I sit with more qualified people than you do. So if you're buying a $9 lead, that's great. Buy a lot of them because it's kind of like junk, gold, junk, silver, junk, gold, junk, bronze. You just have to get a lot of those. And that's fine. There's nothing wrong with that. You're going to learn a lot and you're going to be smart with your budget. But as soon as you can work your way up into better qualified, you get what you pay for, right? If you're spending $80 on a lead instead of $8, there's a reason. There really is. You're going to come across more advanced market sales. And that's what I would like to transition into if you guys don't mind.
Absolutely, please.
So when you're going through the financial inventory and like, what do you make? What do you spend? What's left over? Are you a saver? That's the silver question. Okay. So are you a saver? You're looking for savers, whether it's final expense, mortgage protection, it doesn't matter. You're looking for savers. The silver question. The gold question is, what do you have that acts like insurance? Okay. So let's say that they do have a 401k or an IRA, or, just money in the bank, like a CD or something like that. The thing is that if you don't look for the money, you're not going to see it. So you have to ask those questions. What do you have? Even if you don't even know what you're looking for, ask the question. What do you have that looks or acts like insurance? 401k, IRA, and stop there. And if they say, yes, I have a 401k, if they're 59 and a half or older, then they may be able to move the money. If they're 59 and a half or younger, they may not be able to move the money unless it's a orphan 401k, like from an old employer or something like that. It's not attached to a benefits plan. But let's just say, for argument's sake, that they have 100k. And an old 401k. And once you ask that question and you start seeing those numbers, it's like when you buy a blue truck and all of a sudden you see all the blue trucks on the road. It's like, where did they come from? I thought I had the coolest blue truck on the block. And now I see them on every corner. It's horrible. Why did I buy this blue truck? It'll be just like that. All of a sudden they just start popping out all the time. In this annuity I wrote yesterday, it was an instant internet lead. I mean, they're everywhere if you know what to look for and what to do when you see it. So when you know the right question to ask and you do see it, circle it and say, I'm going to set a follow-up appointment to come back and show you how to protect and grow that, if that makes sense to you.
Protect and grow that. I like that.
Protect and grow. Okay. And if they say, well, what does that mean? I say, well, on the investment arc of risk, you've got the bank account. And I draw a picture with an arc and I say bank account, and it's like, 0.002 dirt. You basically, it's just sitting there. It's one step above a coffee can in the backyard. So that's the bank account, right? And then you've got money market and CD. So, you have to have a good investment in a money market, or CD can be 3, 6, 9, 12 months, short term, locked up, but you're going to get like a point. Maybe 1.2, somewhere in there. Then you have bonds. Bonds have been getting hammered as of late. kind of an inverted yield curve where they're trying to get to 2%. And then you have indexing, and then you have the market. I deal in indexing. Okay, so I participate in markets gains, not losses. The market has risk and fees. Mine has no risk, no fees. So if you're looking at money in the bank, it's like, why are you leaving money on the table? I mean, it's just silly. You know, why would you leave upwards of like 5% on your money sitting in the coffee can? That just makes no sense to me. So if it's in a 401k, so that's pre-tax money, and it's an orphan, then you say, does the market make you nervous? And if they say yes, well, then you say, okay, well, when I come back, I'm going to put together an illustration to show you how to not be at risk of loss without fee, to participate as much as possible in the market's gains without its losses. Does that sound good to you? And everyone says yes. The people that don't say yes, this is the question I ask them. So that doesn't sound, no, the market doesn't make me nervous. Okay, that's fine. I mean, I really honestly don't care. It's like, okay, well, how much of that are you willing to lose? Honestly, how much of that are you willing to lose? And the answer is always zero. And I said, well, if it's really zero, then it shouldn't all be sitting there. Okay. So if it's truly zero, then we should protect all of it and grow it better and faster than bank account, money market, CDs, bonds. But if you're like, well, I don't know, I guess it's not zero. I said, okay, so let me help you out. Have you ever heard of the rule of 100? What's the rule of 100? It's like, well, you take your age from the number 100, and that's how much risk you should remove from your portfolio. And, you know, Bob, you're 66. So you should have 34% at risk with fees, but 66% should not be at risk. And you know, if you can eliminate fees and participate in the market's gains without risk of loss, that's smart money. So I deal in safe, smart money to maximize gains, protect downside risk. Rule of 100. People love rule of 100.
I love that. I've never heard that.
It's so simple, right? You just take the person's age from the number 100, and it's like, that's how much risk smart people take off the table. But don't put it in a coffee can.
Right.
I mean, let's put it in something that's actually going to participate in the market's gains. Yeah, that's smart money. And if they still say no, it's like, well, you know, you've got 150 grand and your guy's been doing good. I got to tell you, unless you have 7 figures, you really don't have a guy. You know, I hate to be the one to break it to you. You have a pie chart. There's nothing wrong with that. I mean, I love pie, but you don't have a guy if you got 150K. You have a system that's a recommendation that comes from the top broker. And that's fine, but it's been 11 years we've been on a run. Everybody's done well. So have you ever heard, you know, buy low, sell high? It's high. This is the time to sell, because in a 401k, IRA, those are paper gains. That's not your gain unless you make a transaction. Okay. So it's like, oh, my 401k is in the toilet. Well, did you sell? No. Well, that's a paper loss. So these are all unrealized gains and losses. I don't deal in those. Okay. I deal in real money. When you're in an index, all of your gains are realized. It only goes up. It never goes down. So I'm sure you've heard of Warren Buffett. In 2008, Warren Buffett bet a New York hedge fund that in 10 years, he would take the index annuity and put $1 million in there and just put it in there and forget about it. And they said, and he said, and I'll outperform you. And they're like, well, we make money when the market goes up or down because we're so smart. We can read the tea leaves. It's like, fine, put your money up. So they bet him $1 million and he smoked them. And I tell the story in every house. And he donated the money to charity. But the point is that, you know, we deal in certainty, not speculation. We deal of no risk, no fee. And so it's like, well, how do you make your money? Well, I get 5 points straight up. I'm not, they don't have people like me. They don't give me a desk or benefits. I'm their sales arm. I'm the one that's out educating people in the field. So I have to be compensated somehow. But yeah, I don't charge you fees, and so it's like, well, Mary, we had a great plan. Sorry, you lost your life savings, but I got my fee. I never have to say that to people because you don't lose your life savings. It only goes up, not down. So, I mean, I love doing index annuities, and we represent Athene, and Athene's the #1 index annuity company on planet Earth. And they have the #1 index annuity in the Agility 10. Well, Agility, the 10's better than the 7, but the Agility, because it's got great indexing strategies. They give you 20%. I think they have gone back and forth, 15, 20, somewhere between 15 and 20% bump on your money in a benefit base, which is twofold. It will help you for an income rider at the end, or if you don't make it to the end, it's a death benefit to your beneficiaries. Show me where you can find a contractual guarantee of 20 points on your money day one if you die on a 5-year payout. You're just not going to find it. And then at the indexing periods, they stuff even more interest credits into your index benefit base so that your income is higher as you get to the end. I mean, it's just fantastic. I buy one every year. I rolled my mom's retirement into it, my dad's, my wife's, my own. So when you own what you sell and you speak with conviction and you talk in simple word tracks and you're talking to savers, in the second appointment, you're just showing up and writing orders. There's no salesmanship at all. And it's really simple. Go out to the fflams.com website and know everything on there. Yeah, read every word. That's what I did in my non-income producing activities. In my off time, I just scoured every carrier's portal and I scoured the whole FFLAMS website.
That website is amazing.
Really is.
It really is. And then now they added Tom Hegna's little videos to it. It's amazing.
Yeah. What Brad, what annuity gives you a locked in 5% gain? All the ones I've researched have caps at 3. Okay, so there's no locked in. Those are 5% on an index annuity. It's non-guaranteed. It's based on an illustration of how it's performed in the past. And they'll look at the last 20 years and the most successful 10 years, the best, the worst, the average. And it's always a tight band. And it's going to be somewhere between the upper 4s and the middle 5s, but a real tight band. So you've got fixed annuities that no matter what the market does, it does the same. You've got variable that's still at risk. Then you have the hybrid, which is the fixed index. That's what we specialize in. So it's not that it's a locked in gain of 5%, but let's say that from year 1 to the end of year 1, it does perform at 5%. That gain is locked in. That's your new basis. So you started at 100K and it went up 5 points. Now your new base for the next indexing period is 105. You didn't have to do anything. It's a realized gain, if that makes sense.
Yep.
Brad, I'll write your next annuity. Okay. No, thank you. I'll write my own annuity. You should all write your own annuities. Look at you, you're laughing. If you die, do you lose the investment that you put into an annuity? Well, if you die, you're dead. So your family,
You don't lose it.
yeah, I'm pretty sure you don't care about money in heaven. But no, your family doesn't lose that. They can either do a lump sum, and they're going to have to pay taxes on that if it's a qualified account. And if it's a 5-year payout, that lowers the tax burden. So they can either choose to do the 5-year payout and get the goodies and lower the tax burden, which is what I recommend. I just had a client die about a month ago, and they were 9 months into the policy, and the spouse is taking the 5-year payout, and they get that benefit-based payout of the 20 points over a 5-year period. If you take the lump sum, you don't get the 20-point payout. So between the tax implications and the 20% benefit-based bump, you really should recommend to your clients they do a 5-year payout. I mean, for so many reasons that makes sense. But you don't have to remember all this stuff. It just kind of comes really easy for me. But I did study. I mean, I didn't just show up day one. My first year in 6 months, I wrote 2. In 2019, I wrote 6. In 2020, I wrote 70. So I just kind of went all in. I knew what I was looking at when I saw them, and everybody should be in an annuity. I mean, it's written everywhere. Every smart investor says if you don't have an annuity in your portfolio, you're missing out. It performs better than bond. And so if you're in cash, I mean, cash is cash. It's just sitting there. If you're in cash or a bond, you're leaving money on the table. So don't do that. You should be putting an annuity into your portfolio for sure. So chargebacks with annuities, if it doesn't make it 6 months, it's 100% chargeback. If it makes it 6 months, it's 50%. If it makes it a year, it's no chargeback. Chargebacks on annuities is like, I don't know, 2%, 3%. It's super small. Really, really small. But you know how people have said, don't get on the emotional roller coaster when you're selling life insurance. Oh, I'm really good. Oh, I'm really bad. Oh, I had a chargeback. Oh, life is great. Life is horrible. You know, don't buy a ticket to that roller coaster. I'll guarantee you the annuity roller coaster is way bigger, way scarier. When you have, you know, a $500,000 annuity and some family member comes in and says, oh, I don't think you should do that. If you're like on the roller coaster, it's going to be a horrible night or a few days. Just don't do it.
Ride.
Be nonchalant. Yeah. I mean, if it happens, it happens. The thing is that think about the blue trucks. There's a lot of blue trucks. You just haven't seen them. Once you see them, they're everywhere. So if you miss one, get the next one. Don't give up. Okay.
Yeah, no, I appreciate you answering the questions in the chat as well, Brad. And I do appreciate you taking time out of your day to pour back into the team here. I know that we peaked with 89 participants on here, which is awesome. And just to part ways with the call, what would you give, I guess, 1, 2, 3, whatever you want, tips to new agents starting the FFL, or what you're telling your agents when they're coming on board? And then we'll end the call.
Yeah, so it's April 8th. If everyone on this call isn't wearing a red coat at convention, then you're just not trying.
Let's go.
Love it. Love it. Well, we'll send this recording out to you, Brad. I really do value your time. It means a lot. And I can't wait to pour back into your team and give back the way that you just did to us.
Thank you.
I appreciate that. I appreciate you.
Anytime.
You have a good evening.
All right. See you guys.
See you guys later.
Thank you.
Yeah, you're welcome.